So in one of your videos, you talked about the 203 loan product that you're using for your flips. So talk about that really quick in terms of like if someone's like wanting some a practical tip on how to get into real estate investing. Talk about that loan product and how it's helped you get multiple doors at a time, which is help can also probably help contribute to you being able to scale so fast.
Yeah, so let me clarify. A 203K loan will be more for somebody buying a residential property. And so the way I
Hmm.
advise it is that if you're going to buy your first home or a home, buy four doors because the FHA, the first time home buyer program, allows for you to buy four doors. It's still considered a residential home or multifamily. And you can use products like 203K. Today, there's so many from a state level, from a whole country level, and the one I'm familiar with is like a 2 or 3K loan, and so you'll be
Hmm.
able to partner that up and use that as renovating for your home. The way I did it to be able to move so quickly was I went more private, right? Because
Hmm.
now I had built that financial foundation. I had the credit to be able to get really good rates that was actually comparable to what the governmental FHAs were offering, but I knew going private it might cost a little bit more, but I had that financial stability to be able to do that. But the key was it would allow for me to move much quicker. So if I was
Hmm.
using a tool, that's why I advise a 2 or 3K loan because you're still moving. Like you said, hey, someone might not want to do 10, 15 houses in 2 years, but what if they bought their first four-door property in 1 year? You go ahead and use your FHA 2 or 3K loan. But with
Hmm.
me, I use the private lender, and then I used through that, I was able to take funds and renovate it. I also tapped into my network because now, as you're building relationships. You don't underestimate people that have money. Okay,
Hmm.
that look as simple, as simple, as simple, and next thing you know, you build trust with them. They're able to give you the money. Their money is backed by the property that they're investing in, and
Hmm.
I'm able to use that to renovate quickly. Go ahead and find a local bank, refinance out, pay my lenders off, and be able to keep the equity in the home and a little bit of profit because I
Yeah.
did the whole renovation process properly. So it was through private lending that I was able to move so quickly. However,
Yeah.
it's the exact same process if you're using your FHA 2 or 3K loan. You're just moving at a much more, reasonable pace, which is still
Hmm.
very, very, very much advised.
Okay, got it. Okay, and then in terms of those private lender, is that kind of what we talked about earlier about investing in relationships? Were those people that you had to kind of build up a relationship, or was it like, hey, here's how much money you got, here's my credit, and they're like, yo, how much money do you need? Like how was that process?
Yeah, so it's both.
Uh-huh.
One, or there are lending institutions or banks who will lend at you at a slightly higher rate or at a fee,
Hmm.
and you'll be able to do it just based on the value of the property, and they'll be able to give you money based on your credit, and that's
Hmm.
about it. And you go ahead, you purchase the property, you refinance it out, and you're able to basically, have the equity of your home, have your rents, and things like that. So what I
Okay.
would do actually to help really maximize my profits is I'll look into foreclosure properties, right?
Mm.
And that was also a really key way for me to like pick up 3, 5 properties all at once. But with the foreclosure property, you need to pay for it in cash because you're dealing with the city or
Hmm.
state that does
County or
it.
whatever. Yeah.
Exactly,
Hmm.
exactly, exactly.
Yeah. Okay.
So through that, it was just the relationships that I had built, right?
Okay.
And being able to go back, show them my portfolio. I had to create, and it's so funny you talk about experience. It's like now all that experience I have in doing market research and creating a portfolio, I'm doing it for myself now, my own brand. I'm
Yeah.
like, hello, my name is Rosie. This is the business. This is what I've done
Yeah.
so far. Now
Yeah.
I'm bringing in all my corporate experience, right? I manage
Mm.
X million in tech transformation for this company and that company or this government agency or that. And so all of that now becomes my package presented to someone that I have a
Yeah.
relationship with. And I say, hey, I need $100,000. I'm going to give you X amount of interest for this amount of time. I'm going to back it up with the property. You're going to be the only person on it in terms of your guarantee. And so if anything's happened to me or if I'm not able to pay, you're basically able to foreclose me out. The insurance, you're going to be on it as well. So there's so much supporting it and
Hmm.
backing it. And I actually have an interesting story about this, Michael.
Okay.
Ooh, I don't know
Love
if
an
I should
interesting
now.
story.
You want me to tell you? So
Yes.
when I was looking for funds, okay,
Hmm.
I have to say this. Okay, so when I was looking for funds, I reached out to my whole network, my friends, folks I've grown up with, folks I went to school with, folks I've been to work with, who just know me and just know the
Mm-hmm.
fundamental on who I am and my hustle. Okay.
Mm-hmm.
And interestingly enough, okay, it ended up being about 5 or 7 folks that were interested and they were like, tell me more. I don't know how to say it, but it's a small sample size, Michael. But let me tell you this. There were about 7 men, okay, and 4 of them were black men, and 3 of them were white men. And I can't say that this is enough of a data to do anything, but I just found it interesting that every single one of the black individuals were looking for an equity stake in my business,
Mm-hmm.
and but they didn't have experience in real estate. And if you know real estate, you actually want to leverage interest in a short time frame because you can get a much higher interest. So back then the
Mm-hmm.
market was going at like 4%, 3%, and I was paying my private lenders in the teens, like 12,
Wow.
13. And you
Okay.
know what I mean? And I don't know what this means, but I just found it so interesting that the white guys got it. Okay.
Mm-hmm.
And they were like, just show me who you are. Show me the numbers of the property, show me how my money is going to be secured. And just like that, they got it because to them, making interest off of their 401k or their private IRA or something, it beats the market. You're not going to get 13, 14% in the market. But if I were to take this money and give it to you, because one, I trust you, and not only
Mm-hmm.
that, it's not even about trust because they're guaranteed the property is backing the investment they're giving it. I didn't put not more than one person on a property. And don't ever do that, by the way. If anyone is wanting you to invest in a property and they have like tens of people, hundreds of people on a property, that can be challenging.
Yeah.
So I just found it so interesting that, wow. And then
Do
at
you
the end
think
of the
that's
year,
kind of education, like just not understanding just even how to do real estate? Like, you mean is that just? I think that sounds like to me like an education disparity.
ooh, that could be something. That
Yeah,
could be
which is
something
interesting to
because
me because like right now we're going through kind of a black renaissance when it comes to real estate. I mean, I think a lot of black people are trying to get into real estate and learn real estate. And so it's interesting that that could just be like you said, a small sample size, but I think
very
overall, I think as a culture, I think we are starting to learn to get more savvy and become more savvy investors. And so yeah, hopefully in the future that starts to change a little bit.